Buying your first home in London is, without any exaggeration, one of the most significant financial decisions you will ever make. And very often, it is also one of the most emotionally driven. For many first-time buyers, it represents independence, stability, and also long-term planning. At the same time, however, it can feel complex, uncertain, and I would say at times even overwhelming. So in this video, I want to take a step back and walk you through calmly and logically what you actually need to understand before buying your first property in London. We will cover how to assess affordability realistically, how the legal buying process works from offer to completion, how UK mortgage regulation affects you as a borrower, and we will also see the advantages of buying but also the disadvantages. We will also talk about the risks that are often underestimated, and in the end, we'll determine whether buying is the right decision for you right now. So the purpose here is not to convince you to buy or not to buy. It is not to push you in one single direction. The objective is to give you a structured framework so that you can make the decision with clarity and financial awareness. My name is Marco Fazanella. I am the co-founder of Habitat Investments, a London-based company specializing in property investment, development, and asset management. Through our work in the London market, we regularly assist buyers and investors in navigating transactions and in long-term strategy. If there is an area where we consistently see uncertainty, this is precisely at the first-time buyer stage. So with that context in mind, let us start from the foundation, your risk profile. The first thing to understand is that first-time buyers are structurally more exposed than other purchasers. Unlike existing homeowners who may be reinvesting equity from a previous sale, first-time buyers are usually deploying the majority of their saving into one single asset, and they are relying on one single transaction. This immediately increases sensitivity. And I'm talking about sensitivity to interest rate movements, which can go up or down, job stability, unexpected costs which can arise during life, market timing. So because of that, affordability should never be assessed optimistically. In fact, it should always be assessed conservatively. So this approach naturally leads us to the question: how is affordability actually calculated in the UK and specifically in London? Mortgage lending in the UK is regulated by the Financial Conduct Authority, and lenders must follow strict affordability guidelines, which have been introduced after the financial crisis under the Mortgage Market Review frame. What does it mean in practical terms? This means that lenders will assess income multiples, typically around 4 to 4.5 times gross income, existing financial commitments, credit history, and, importantly, stress testing against higher interest rates. However, and this is very important and something we usually see during our work, just because a bank is willing to lend a certain amount does not mean that amount is comfortable or sustainable for you. Let me illustrate this concept with a concrete example. Imagine you are purchasing a £550,000 one-bedroom apartment in central London. With a 10% deposit, that means £55,000 deposit and £495,000 mortgage. Let's assume a 5-year fixed mortgage at 5%. Your monthly repayments will be approximately £2,500 to £3,000 per month. Now, at first glance, that may feel manageable for you, but let us stress test it. If at refinancing rates rise to, let's say, 6.5%, your monthly repayment could increase to around £3,400 per month. This is roughly £400 extra per month, which is close to £5,000 per year. And that is before you include service charge, which often can vary between £3,000 to even £5,000 annually in modern developments, council tax, insurance, maintenance, and all other costs which are usually not considered by first-time buyers. So now that we understand what affordability means and how this should be calculated, we need to understand what actually happens once you decide to proceed. and buy a property. The English residential transaction process follows a specific structure, and it is very different from many other countries around the world. When your offer is accepted, the deal proceeds subject to contract. What does it mean? It means that neither side is legally bound yet. During this stage, following acceptance of an offer, your solicitor conducts title checks and legal searches, lease terms are reviewed carefully, your lender carries out evaluation, the so-called mortgage valuation, and you may also commission an independent RICS survey. Only at exchange of contracts, so when all these checks have been satisfactorily completed, does the transaction become legally binding for both parties, the buyer and the seller. Completion, which is when you receive the keys of the property, usually follows 1 to 2 weeks later. Now, why is all of this important? Because until exchange of contracts, the deal can fall through. And for first-time buyers, that uncertainty can feel really unsettling. So understanding the structure really helps to manage expectation. So at this stage, you may be thinking, if the process is complex and the financing requires stress testing, why buy at all? This brings us to the balanced view. Let us start with the good part, the advantages. Buying allows you to build equity over time. If held long enough, and assuming stable market condition, the property may also benefit from capital appreciation. Also, a fixed-rate mortgage provides short-term stability in terms of payments. And sometimes, even more importantly, psychologically, ownership offers security, permanence, and control over your personal living space. However, and this is also equally important, ownership also has disadvantages. For example, the first one, it reduces flexibility. Selling is not immediate and it involves cost and exposure to market timing. Second, and this is very often underestimated, you become fully responsible for maintenance and capital expenditure. For example, service charge can increase, major works can arise, unexpected repairs can occur. Third, there are substantial upfront costs, legal fees, surveys, mortgage fees, stamp duty, and all these costs need to be spread over several years before buying becomes financially efficient. And finally, property values can fluctuate, short-term declines are possible. Also in the long term, sometimes property values stay the same or even go down. If you would like to see a full financial comparison between renting and buying, including cash flow modeling and opportunity cost of your deposit, I have created a separate video on this channel where we analyze that in much more detail. Watching both perspectives will allow you to make a decision based on data and not decision based on emotions only. Now, assuming buying may still be appropriate for you, the next station becomes strategic. When selecting your first property, it's usually very tempting to maximize, for example, on size, but often the wiser approach is to maximize flexibility. In fact, and I'm talking specifically about London, a well-connected property may be easier to resell, can also be easier to rent in case circumstances change during life. Also, they can offer stronger long-term liquidity, so particularly in your first purchase, preserving optionality can be much more valuable than maximizing, for example, square footage. This brings us to one more reflection. Is buying the right decision for you? Buying becomes financially rational when you expect to stay for several years, your income is very stable, you also retain emergency savings, your mortgage remains affordable under stress test conditions as we saw before during this video. Instead, if your career path is uncertain or relocation is likely in the short term, renting may still provide superior flexibility and more relaxed lifestyle. So a very important concept just to summarize everything. The decision should always align with your life trajectory and not with market pressure or social expectations. So I have a friend who bought a property, I need to buy as well. No, this is the wrong approach. In fact, buying your first home in London is a very long-term financial commitment. So if there is one principle I would leave with you, this is buy when your circumstances are stable, buy when you understand both the benefits and the risks. On this channel, you will find further structured data-driven analysis of the London property market and real estate more broadly. We will cover investment, strategy, financing, market cycles, and asset management. Thank you for watching. I hope you liked this video and was helpful for you, and I will see you in the next one. Ciao!